Turning now to one of the hardest hit sectors this week, and that would be energy, down more than 15% in 5 sessions as the price of crude suffers its biggest weekly drop since 2008. Another notable move in the commodity market this week, gold, usually the safe haven trade, it has taken a leg lower in the past few days after hitting a high on Monday. Let's bring in 2 CNBC contributors, Ron Insana, senior advisor to Schroders North America, and Jeff Kilburg, founder and CEO of KKM Financial. Welcome to both of you.
Thanks.
Talk to us a little bit about energy, Ron. It has been struggling for quite a while, but this week we're down in the mid-40s on oil, and that is hurting a lot of the big oil companies, the explorers, and all.
You know, prior to the outbreak of the coronavirus, you had excess supply. Now you have what economists or market analysts like to call demand destruction, particularly in China, where it's estimated 3 million barrels a day of oil are no longer needed as the economy shut down there. And so then you've got a huge imbalance between supply and demand, and that is one of the reasons why we've seen this big cratering in the price of crude.
OPEC meets next week. Russia is one of the key players here. They seem to be holding on to their production levels, but there is going to be pressure for a production cut led by Saudi Arabia.
Sure. Well, the Saudis want it to go up. And for some reason, and Russia has, again, potentially more fiscal problems, budget problems, if oil prices continue to go down than maybe any other country. And yet they seem to be holding the line on trying to cut production. Not sure why, but it is muddying the waters, and it may make OPEC's meeting next week more contentious than usual.
Let's turn to gold, Jeff. You know, I was watching gold on Monday, and it hit a multi-year high, and I blinked, and I didn't look back until today, and now it's way, way down. What gives? You think that gold is a safe haven buy?
Well, Tyler, typically it is, but a very counterintuitive trade this week, and it's fascinating, right? To your point, on Monday, we touched nearly $1,700 in the price of gold futures. Then all of a sudden, after consecutive down days in the equity markets, what happens? Well, active investors, traders, and money managers need cash. It's a cash generation play, so all of a sudden there's margin calls, and where do they take profits? They take profits in gold, Tyler. It's still interesting to see gold is up 7.5% year to date. So right now, technically, there's still strength in gold, but yes, it's not behaving typically like the safe haven trade. But rest assured, gold is still intact. I think it moves higher, just in the same way they're buying treasuries. Safe havens are very much alive this week.
So this is a breather, not a break in a longer-term trend.
That's absolutely right. We've seen relative strength momentum since late 2018 when we saw that Q4 drop. But right now, it is a little bit of a breather. But it's interesting to see what a significant drop as the U.S. dollar drops. So there's a lot of undercurrents here to take in, Tyler. But I do think that we will see gold intact.
Quick closing thought, Ron.
Sure, and interest rates have come down as well, which also typically makes gold more attractive. But I'm gonna quote our good friend Art Cashin, whom I hope is recovering well from a recent auto accident. But he says when you can't sell what you own, you sell what you can. And so if indeed you're stuck in a position that you can't get out of, you sell things where you have a profit. Right. That was gold.